1 month ago, the Federal Reserve tightened interest rates for the first time in 9 years. This raised a few eyebrows because we were heading into what appeared to be a slowdown. But now the question is not just the U.S., but are we about to tip into a global recession? I'm joined now by Jacob Frenkel. He's the chairman of JPMorgan Chase International. And Jacob, I have to ask you, because you travel the world, and especially lately, you've been watching this closely, is the globe about to tip into a recession?
I don't believe so. And since you mentioned the Federal Reserve, I want you to know that I strongly endorse the decision that was taken, and it was high time for normalization to start taking place. These excessive, unconventional monetary policies have had also unintended consequences. They performed extremely well at the beginning, and it's time to normalize. Labor markets in the United States have improved, unemployment declined, and let's face it, the US is growing. Needless to say, it's not growing at the rate that it used to before. What we have today is that emerging markets are slowing down. China is growing at a slower rate. India still grows. So the world is asymmetric, and we have some disconnect between the emerging markets and the industrial countries. But I want you to also focus on one important thing. If you want to assess for what is the world, where does the world economy goes, it will be a mistake to look at it through the prism of financial markets. Financial markets, there are good times where they mirror the economy, but we are today in a situation where there has been a long period of disconnect. The financial markets are now coming back to where they are more normal, we will see.
But I understand what you say, don't look through the prism of financial markets, but we also can't look through rose-colored glasses. Canada is having real problems because it's a commodity-based country. So is Australia. Of course, I don't need to remind you about China. You just came from Russia. What is it like on the ground in Russia right now, where the ruble's been hammered? Their stock market tried to recover last year, did okay, but you've got to figure they've got the Western sanctions against them too.
Russia has a huge challenge in front of it. It is growing in a negative rate. It is shrinking. And there is nothing in the cards today that will show a reversal. Because it has, first, they are lagging behind in doing the structural reforms which they were supposed to do, and add to it the fall in the price of oil, the sanctions, the geopolitical uncertainties, and all the rest. There is only one resolution to these issues, to many of these countries. You really need to prepare the umbrella before the rain comes. It's too late to say, what do we do now? Now just hold on and cross this particular storm. They need to diversify their economies. It is making no sense in the modern era for a country to adopt a strategy that has such a narrow base of economic activities. So if you depend only on oil, of course, when oil prices fall, you suffer. You do not do it with your portfolio of assets, and you should not do it in your own economy.
I get that the U.S. is that great bastion that's growing, but it cannot be a silo unto itself. Next week, the Federal Reserve meets again. Do you anticipate it will tighten rates now?
When we meet next year, and you ask me about what happened in January 2016, we will both agree that who cares? The issue is not whether the Fed raises rate next week or in a round thereafter. The issue is the trajectory. And the Fed has announced we are on a trajectory of normalization. We may, from time to time, change the pace, but there is only one way forward. It will be a great mistake for them even to think about lowering rates because there is nowhere to go. The whole point of starting to normalize is that during the long period of unconventional policies, monetary authorities all over the world ran out of ammunition.
But you don't see the Fed having to take back that quarter point that they put in December?
Absolutely not. It will be very counterproductive. It will destabilize markets. And let's face it, in the challenges of today, 25 basis points one way or another do not make the difference, but they project a strategy, and a strategy of confusion will never do well. I trust that the Fed will not project any strategy of confusion.
What are you most interested in learning and hearing about here in Davos this year?
Well, like every time when we come to Davos, one realizes that the world is concerned about much bigger issues than what will the Fed do or what will the ECB do, etc. There are here many sessions that deal with societies, that deal with brain, that deal with gender, that deal with inequality, that deal with incentives, that deal with health, that deal with you name it. And the reason is that at the end of the day, our purpose is finding a way to improve the standard of living globally. And the standard of living requires sharing knowledge, improving science and innovation and technology.
Deserves much more attention. Thank you so much, Jacob. Great
Thank
to
you.
see you. Thank you.